Everyone, welcome to EduTap and welcome to today's Finance 360-degree session. So in today's session, we are going to discuss 3 articles. The payment aggregator directions that we had started in the previous class, we are going to finish it today. Then we are also going to discuss about the RBI that has renewed the statement of commitment to the Foreign Exchange Global Code. So what is this Foreign Exchange Global Code and what does this signify and why the RBI has renewed it? All of this we are going to discuss in today's session. This is a very important press release of the RBI as well as it is quite in news recently. Okay, the next article is regarding the RBI that has constituted the Payment Regulatory Board headed by the governor. So as you know that the BPSS, that is the Board for Regulation and Supervision of the Payment and Settlement System. So this board has been replaced with the Payment Regulatory Board. Okay, we had discussed this in June and we discussed that how the Payment Regulatory Board has replaced the BPSS. Okay, so now the RBI has informed that the constitution of PRB has been completed. So this is also what we have to discuss. The Payment Regulatory Board is very important. Okay, and I had taken a complete session on the Payment Regulatory Board, so do see that session. Now let's start with today's session, but give me a thumbs up. All good and clear? Okay, thank you for the confirmation. So let's get started without any delay. Before that, there is a big announcement that we are having the super weekend offer where we are providing the huge offs, and this is valid till 5th of October 2025. So there is a super weekend that is going on. So for that, there is a super weekend offer and we have launched this offer on all the regulatory body courses where you are getting flat 75% off for the RBI Grade B, IRDI Grade A, IFSC Grade A, NABARD Grade A, SEBI Grade A. For all these courses as well as for the combo courses, you are getting flat 75% off and you can use the code FESTIVAL75 to get this offer. Okay, and this is valid till 5th of October only. This is valid till 5th October only. Okay, so this is the idea that the offer is going on, and if you want to avail the courses, if you want to get the RBI Grade B test series or crash course or even the quick revision batch or even the newly launched current affairs course, so any of the course you can get at flat 75% off and you can use the code FESTIVAL75. Okay, this is a good offer. If you have not purchased the course till now, do not wait further because this course is valid or this offer is valid till 5th October 2025 only. Okay, so this is the idea. Now let's start with today's session. So we had started with the master direction on regulation of payment aggregator. Okay, so payment aggregator, basically they facilitate the fund transfer between the customers and the merchants, between the customer and merchants. So payment aggregators, they provide the different channels for the customers to pay, to the merchant. So UPI, the wallets, the card, the credit card, debit card. Okay, so payment aggregators, they are the ones that are providing or that are facilitating the fund transfer from the customers to the merchants. Okay, so I hope you remember. And the payment gateway, they are just providing the technological interface, they are not facilitating the fund transfer. So this is a very big difference between the payment aggregator and payment gateway. The payment aggregators, they facilitate the fund transfer, they collect the fund and they further transfer the fund to the merchants, while the payment gateways, they are just providing the technological interface. They do not engage in fund transfer or they do not handle the funds basically. So we had started with the payment aggregator discussion and we discussed that the RBI has released the master direction on the regulation of payment aggregator, and these directions shall be called Reserve Bank of India Regulation of Payment Aggregator Directions 2025, and these shall be applicable to all the banks and non-banks which are doing the payment aggregator business, as well as these directions will be applicable to all the authorized dealer banks that are allowed to buy and sell the foreign currency, as well as the scheduled commercial bank which are engaged with the payment aggregator. So all the banks, non-banks that are engaging in the payment aggregator business, as well as all the authorized dealers and the scheduled commercial bank that are linked with the payment aggregator, they will also have to follow these directions. Then we discussed about the authorization of the payment aggregator business, that the bank does not require authorization to carry out the payment aggregator business, but the non-bank entity need to take the authorization. Okay, after taking the no objection certificate from their regulator. Within 45 days they have to apply for the authorization of payment aggregator. So if a entity wants to authorize as a payment aggregator, they need to take the no objection certificate from their own regulator within 45 and after taking the no objection certificate, within 45 days, they have to apply for the payment aggregator. This is the idea. And the non-bank payment aggregator shall be a company incorporated in India. Then we also discussed the following is applicable from the date of these directions, that is, the certificate of authorization has to be taken under the new directions. This is the basic idea. Okay, then we discuss about the capital requirements. Do you remember this? Let me ask you a question, that what is the minimum net worth requirement immediately when a entity is becoming a payment aggregator, and what is the net worth requirement when the payment aggregator or the entity has completed third year of being a payment aggregator? So what is the initial net worth they require, and what is the net worth they require at the end of the third financial year? So the initial net worth that they require was 15 crore, and after the third financial year has been finished, 25 crore of the net worth is required. I hope you remember this. Okay, then we discussed the net worth definition also, and we had discussed the general directions. Okay, that the PA, the payment aggregator, shall not give an option of ATM pin as a factor of authentication for the card not present transactions. So this we have already discussed. As well as for the payment aggregator cross border, there is the limit for the inward or outward transactions. For the inward or outward transactions processed by the payment aggregator cross border, a maximum value per transaction shall be 25 lakhs. Okay, so these are some of the important things that we have discussed in the previous session. We started with the master action. Now, very good. Now let's continue with the master action, and let's do the second part of the master action. So due diligence by the payment aggregator. So remember this very clearly, that the payment aggregators are the ones that are responsible for conducting the customer due diligence of their merchants. So for the payment aggregators, the customers are the merchants. Okay, now the payment aggregators, they have to do the customer due diligence of the merchants in accordance with the master action on the know your customer. While onboarding, the payment aggregator shall, with the merchant's consent, retrieve the merchant's KYC record from the KCYCR, that is from the central KYC registry. So basically the payment aggregators, they are responsible for conducting the customer due diligence of their merchants that they are onboarding, for collecting the money from the customers for the merchants. So for the payment aggregators, the merchants are their customers. So payment aggregators, they have to do the customer due diligence of the merchants, and for the customer due diligence, they can retrieve the merchant's KYC record from the central KYC registry with the permission from the merchant. This is the basic idea. But let's say that the central KYC registry does not have the updated information about the merchant, or it does not have the information about the merchant. In this case, the other norms can be followed. So if the merchant's annual turnover does not exceed 40 lakh or its annual export turnover does not exceed 5 lakh, the following process can be followed as an alternative for the customer due diligence. Okay, so obtain a copy of the PAN or Form 60 of the merchant and verify the PAN from issuing authority. Second, conduct the contact point verification, that is physical verification has to be done for the merchant. Okay, so the payment aggregator for the customer due diligence has to do the physical verification, of the merchant, or we can say that obtain a certified copy. So, and the third is obtain a certified copy of one officially valid document of the proprietor or of the person holding the power of attorney to operate the account of the merchant as applicable. So this is the idea, that either retrieve the merchant's KYC record from the central KYC registry, but if it is not updated, if it is not present, then in this case, if the merchant's annual turnover does not exceed 40 lakh or its annual export turnover does not exceed 5 lakh, then this process can be followed, that the PAN card can be taken, the contact point verification, that is physical verification of the merchant, can be done, and obtain a certified copy of one officially valid document of the entity that is operating the merchant account. Okay, this is the basic idea. Now going forward, due diligence by the payment aggregator. So payment aggregator shall undertake the background and antecedent, the like background check, we can say, of the merchant in case of a payment aggregator contracts with another payment aggregator. See what happens, that sometimes, let's say the payment aggregator B, it is onboarding the merchant. Now payment aggregator B, it is not able to, like, it has onboarded so many of the merchants that it is not able to handle all the payments and such. So payment aggregator B is connecting with payment aggregator A that is connecting with the customers. Okay, so sometimes a merchant is served indirectly, meaning that they are onboarded by a payment aggregator, but the customer's payment is collected by the another payment aggregator. Okay, so in such cases, the payment aggregator A collects the money from the customers, passes this money to the payment aggregator B, which has onboarded the merchant and which passes the money to the merchant. So this is the idea that the payment aggregator contracts with another payment aggregator. So one payment aggregator can contract with another payment aggregator. But for the due diligence, which payment aggregator will be responsible? Can you tell me? What do you think? Yes, Kabir. Can you tell me that which payment aggregator is responsible for the due diligence? The payment aggregator B will be responsible for the due diligence because it is the one that is onboarding the merchant, right? So remember that even if there are multiple payment aggregators that are involved for the transfer of the money, the onboarding, the payment aggregator that is onboarding the merchant will be responsible for carrying out the due diligence. Okay, so this is the idea that even if the multiple payment aggregators are involved, the payment aggregator that is onboarding the merchant, that is finally connected with the merchant, will be responsible for the due diligence also. Now, payment aggregator shall facilitate allotment of appropriate merchant category code and merchant ID or terminal ID to its merchants, including those onboarded through the overseas payment aggregators. This is the basic idea. Now next is non-bank payment aggregators that are not the banks. These shall register itself with the Financial Intelligence Unit India in compliance with Master Direction on KYC. So basically the payment aggregators themselves have to register themselves with the Financial Intelligence Unit India. Okay. Next is the payment aggregator, including an existing payment aggregator whose application is pending with the Reserve Bank of India for authorization, shall ensure that the merchants are onboarded till December 31st, 2025, they comply with the due diligence requirements within 1 year from the date of the master action. So, the merchants that are onboarded on the payment aggregator till December 31st, 2025, that is till the end of this year, they have to comply with the due diligence norms within 1 year from the release of the master action. Now, the merchants that are onboarded from 1st January 2026, that is from the new year, the new merchants that are onboarded on the payment aggregator, they have to follow the due diligence requirements from the 1st January 2026 onwards, from the day onwards. Okay. So, from January 1, 2026, merchants should be onboarded in accordance with due diligence requirements. So, remember that the merchants that are onboarded before or on 31st December, these merchants will get 1 year for the due diligence requirement to be completed. Okay, but from January 1, 2026, the merchants that are onboarded, for them the due diligence requirement has to be met when they are being onboarded. This is the basic idea. Now, the ultimate responsibility of due diligence shall lie on the payment aggregator, and the payment aggregator can have the agents. So, payment aggregator can also take the help of their agents for completing the due diligence requirements. Okay, so this is the idea. So, ultimate responsibility of the due diligence shall lie on the payment aggregator, and agents can only be used for the limited purpose, but agents can be used by the payment aggregator. Now, acquiring bank. Have you heard about acquiring bank? Has anyone heard about the acquiring bank? See, acquiring bank is the bank that is collecting the money on behalf of the merchants. Okay, or basically they are the ones that are collecting the money so that the merchant can receive the money in their account. So acquiring bank is the bank that provides merchant accounts, and settle funds to the merchants. Okay, so acquiring bank shall have a policy for processing payments for merchants acquired through an authorized non-bank payment aggregator. So, non-bank payment aggregator, basically it is the payment aggregator that is facilitating the payment between the customer and the merchant, But finally, the money has to go from the customer to the merchant. So, acquiring bank is the one that is providing a merchant account so that the merchant can receive the money in its account. This is the idea. Okay, so acquiring bank need not undertake customer due diligence of the merchant, because the customer due diligence has to be done by the payment aggregator. Remember this. Okay, acquiring bank of non-bank PA shall ensure the merchants onboarded by the payment aggregator, they are following or they are in compliance with the acquiring bank's policy. So basically the payment aggregator, they are onboarding the merchant. So these merchants should be following the they are in compliance with the acquiring bank norms also. This is the basic idea. That means these merchants should not be doing money laundering. These merchants should not be doing terror financing through their accounts, through their money and such. So acquiring bank of a non-bank payment aggregator has to keep in mind that the payment aggregator is onboarding the merchant, and those merchants should be in compliance with the acquiring bank's policy also. Okay, so this is the idea. Now settlement of funds and escrow account. So this is, we are moving towards the end of the master direction. So first of all, we have to discuss that how the settlement of funds happen. What is this escrow account? So non-bank payment aggregator shall maintain the funds collected on behalf of its merchant. So from lakhs of customers, the payment aggregator are receiving the funds so that they can settle the funds to the merchant. Merchants. Now you have to understand that payment aggregator, they are receiving the money on behalf of the merchants, and this money has to be kept in the escrow account, in the third party account. It should not go to the account of the payment aggregator and such. It should go to a third party account. So the money that is collected from the lakhs of customers, so payment aggregator has to keep this money in the escrow account. In the third party account with any of the scheduled commercial bank in India, so that from this escrow account the money can go to the merchant. In case a payment aggregator cross border, so in case of payment aggregator cross border, that is involved in the inward transaction or outward transaction, that is doing inward collection or outward collection and such. So the payment aggregator cross border in such account shall also refer to as inward collection account. So in case of payment aggregator cross border, they need to have the third party account, they need to have escrow account. They also need to have escrow account to collect the money from the customer to pay to the merchant. Okay, now the payment aggregator cross border, if they are doing the inward collection, this account will be called inward collection account. If they are doing collection for the outward transaction, these accounts will be called outward collection account. This is the basic idea. Okay, now details of operation, how these escrow accounts will operate, how these escrow accounts will get the money or will send the money and such. So all of this we will discuss in the table below, and these directions have to be adhered to by December 31st 2025. Such escrow account shall only be utilized for authorized business purposes only. That is the idea. So basically what the directions are trying to say, that the payment aggregator need to have a escrow account so that it can collect, this third party account can collect the money from the customers and can pay to the merchants in a seamless manner, and the funds are kept in the escrow account. Payment aggregator cross border also need to have the third party account to collect the money from the customers and pay to the merchants. These third party account, these escrow accounts will be called inward collection account or outward collection account. Inward collection account or outward collection account in regards to inward transaction or outward transaction that is happening. Any confusion, anyone? Any confusion? So basically escrow account requirements or third party account. In the third party account, the money will be maintained. The money will not be maintained in the payment aggregator's own account. The payment aggregator need to have the escrow account, or the payment aggregator cross border need to have inward collection account or outward collection account, so that they can collect the money from the customers and can help in the fund transfer to the merchants. Okay, got it? So now the escrow account requirements. So first of all, in the case of domestic, the escrow account should be opened with a scheduled commercial bank. In case of inward collection or outward collection, you can understand that the foreign money is involved, or let's say the transaction is happening between India and the other country. So in this case, authorized dealers, that is authorized dealer that are allowed to buy or sell the foreign currency, they are involved. Whenever the inward collection or outward collection is happening or outward transaction is happening, so basically the authorized dealers are involved because the foreign exchange is also involved here. So this is the basic idea. So in case of the payment aggregator escrow account, the escrow account domestic has to be maintained with the scheduled commercial bank. In case of inward collection account or outward collection account, the authorized dealer category 1 scheduled commercial bank, they will be maintaining these accounts of the payment aggregator cross border. Okay, account constitutes, so the escrow account domestic constitutes the collection of funds on behalf of the merchants onboarded by the payment aggregator. So basically the payment aggregator will be collecting the funds from the customers. Inward collection account, so collecting the proceeds of inward transactions on behalf of the merchants onboarded by the payment aggregator. So inward collection account basically collect the funds from the other countries, okay, collect the fund from the other countries for the settlement to the local merchants. So that is inward collection. The money is coming in for the merchants in the country, okay. Outward collection basically means that the money from the customers in India, the money is going out for the payments to the other countries, okay, or to the merchants of the other countries. So collection of proceeds of outward transactions, so basically money is being collected from the customers so that the payment can happen for the other merchants, other overseas sellers or overseas merchants and such, onboarded by the payment aggregator cross-border. Now inward collection, the inward collection that will happen will be in the form of INR, okay, or non-INR currency also, because let's say the German, they are sending their currency, the US, if they are buying something from our merchants, they are sending their own currency and such. So the inward collection can happen even in non-INR currency, okay. So that is the idea. Now in the outward collection, the customers of our country, they are paying, so they will be paying in rupees. So payment aggregator will be collecting the rupees, and will the scheduled commercial bank will be responsible to to exchange the rupees in the currency that is required, okay. So basically the payment aggregator will collect the money in the outward collection account. So basically customer of India is paying to the payment aggregator cross-border in the outward collection account. So customer in India will pay in rupees. This rupees, the scheduled commercial bank authorized dealer will be responsible to convert this rupees in the foreign currency to send to the overseas seller, okay. But basically outward collection account will only receive rupees, from the customers of India. This is the idea. And inward collection account, so payment aggregator cross-border that are maintaining inward collection account, so they are getting the money for the merchants in India, they are getting the money from German, from USA, UK, from the other countries. So inward collection account can receive the money in rupees, or it can receive the money in non-INR currency also. But the merchants, so separate account has to be maintained in INR or each non-INR currency. So this is the idea. Any confusion anyone has till now? Any confusion anyone? Now, escrow account requirements following pre-funding. See, pre-funding means keeping money in advance in the escrow account, in the third-party account by the payment aggregator before transactions actually happen, so that the advance money provides a cushion or buffer, ensuring that the payment aggregator, they can settle the payments to merchants or process refunds in a smoother manner without waiting for funds to come, okay. So basically pre-funding means that the money is kept in advance in the escrow account so that the payment aggregator can have the continuous flow of the money and can provide the refunds in a very smooth manner, okay. So pre-funding, this is allowed in the for the domestic escrow account. This is not permitted for the inward collection or outward collection accounts, okay. So for the inward transactions, for outward transactions, pre-funding by the payment aggregator is not allowed, okay. Withdrawal of pre-funding. Now in the domestic escrow account, once the pre-funding has been done, it is not allowed to take back. Once the buffer or the cushion has been provided in the escrow account, you cannot take out this money, so not permitted. In the inward collection account, in the outward collection account, this is not applicable. Additional escrow accounts can be maintained by the domestic payment aggregator, also by the cross-border payment aggregator also. The additional escrow accounts can be maintained. Inter-escrow account transfer, auditor's certificate is needed for such transaction. If from one escrow account, the money has to be transferred to the another escrow account. Basically, the escrow account is for what? Is to take the money from the customers and to send the money to the merchants. So from one escrow account, if the transaction is happening to another escrow account, that the auditor's certificate is needed for such transaction for the domestic payment aggregator, okay. In case of the inward collection account, outward collection account, this is not permitted. The inter-escrow account transfer is not permitted. Now, for what reasons the payment aggregator are collecting the money? The payment aggregators, they are collecting the money, they are taking the credit, okay, they are collecting the money for receipt of funds from the customers. They are taking, so payment aggregator in the escrow account, they are receiving the money from the customers, okay, for the sale of goods and such. They are receiving the money from the customers, as well as receipt of funds from other payment aggregators. As you know that one merchant can be served by different payment aggregators. So let's say payment aggregator A has collected the money from the customer and is sending the money to the payment aggregator B. So now this money will go from payment aggregator A to payment aggregator B's escrow account. Okay, this is the idea. Refund thereof initiated by the merchant. So merchant has initiated the refund. Okay, that will also go because the refund has to be. Now the money that is coming from the customer will be settled to the merchant. The money that is coming from the another payment aggregator will be settled to the merchant. Now the merchants have to do the refund also, because let's say you bought a kurti but you do not like it now, so you want a refund for that. You have returned that kurti. So merchant has to do the refund. So this refund amount will go to the customer. So all these payments are received by the escrow account of the payment aggregator B. Okay, pre-funding. So pre-funding, this is the amount that is kept in the escrow account. So this is also, pre-funding is also received in the escrow account, as well as payment received for incentives. So payment aggregator, they also receive the incentives, cashbacks that they have to give to the merchants. So the Amazon, Flipkart, okay, Meesho, let's say Myntra, for their merchants they also give the incentives, cashbacks. Even the big brands, to the merchants they give the incentive or cashbacks to further sell the product. Okay, so these incentives, promotional activity, funds and cashbacks, they are coming in the escrow account to further transfer it to the merchant. Any confusion in this? Any confusion here? No. So this is the basic idea. I hope this is very much clear. Now coming to the last part, okay, of this table. So escrow account, we have discussed that the money is coming in. The money is coming in from customers. The money is coming in from payment aggregator, from another payment aggregator. The money is coming in from merchant for the refunds. Okay, the money is coming in the form of incentives, cashbacks to be given to the merchant. Now this is the money that is coming in the escrow account. So money will be going out also. Money will be going out to pay for the merchants, to pay to the merchants, or the money will be going out to pay refund to the customers, to pay refund to the customers. Okay, the money will be going out because the payment aggregator has given the money. Now this money has to be settled to the merchant because this money is collected from the customer indirectly. Okay, so this money will also be go out. The incentive cashback that has to go to the merchants. Okay, incentive cashback given by the Amazon, Flipkart, the platforms or the brands, they are giving incentive cashback, so that will go to the merchant. So payment of commission. Now the escrow account, so payment of commission, the commission from the escrow account, the commission has to be given to the payment aggregator, and this from the escrow account that the payment aggregator is holding, from this escrow account the commission will be transferred to the payment aggregator's own account. Got it? So these are the debits that will happen from the escrow account. Okay, payment to another payment aggregator. Now let's say that from the escrow account, let's say payment, this is the payment aggregator A's account. Okay, so the payment aggregator A has received the money from the customer, and the payment aggregator A, after receiving the money from the customer, has to give this money to the another payment aggregator so that they can settle with the merchant. Okay, so the payment to another payment aggregator or payment aggregator cross border can also happen. So these are the debits that has to be debited, the money that has to be debited. Okay, so this permitted debit shall not be used to transfer funds from an entity acting as a Bharat Bill Payment Operating Unit. So basically the payment aggregator that is transferring the money to the another payment aggregator, this should not happen under the Bharat Bill Payment Operating Unit system. That is the idea. Okay, to its BBPS escrow account, except in case where the entity acts as a payment aggregator to an agent institution on its behalf, transfer fund to the BBPS escrow account. So basically from the Bharat Bill Payment Operating Unit, the money should not be transferred to the Bharat Bill Payment System escrow account, third party account, but this can happen in case the Bharat Bill Payment Operating Unit is a payment aggregator, so they are sending the money to their agent institution. In this case, the money can go from the Bharat Bill Payment Operating Unit to the escrow account. So basically from the Bharat Bill Payment Operating Unit, the money should not be transferred to the escrow account of the BBPS, but in case the Bharat Bill Payment Operating Unit is a payment aggregator, then the money can be transferred to the agent institution through the escrow account of the BBPS. This is the idea. Not much important. Next is payment to any other account, third party. So let's say the merchant has directed that kindly give the money to the third party. Okay, so because of the settlement that needs to be done. So payment to any other account, third party. So merchant is sending the money in the escrow account, or the merchant is requesting the payment aggregator to send the money to the third party. So payment to any other account, third party, on specific direction of a merchant, this can be possible having physical or online presence with an annual. Now which merchant? So the merchant that has the physical or online presence, as you know, the merchant, they can request the payment aggregator that from the escrow account kindly send the money to the third party. So the merchant, which merchant can request such a thing? The merchant that have the physical or online presence with annual turnover above 40 lakh or an annual export turnover of more than 5 lakh. They can request the payment aggregator that send the money from the escrow account to the third party, provided the third party is the customer or the payee that interfaces with the payer for purchase or delivery of goods or services. So this is the basic idea. Any confusion? So these are the permitted debits from a payment aggregator escrow account. So permitted debits are the payment to the merchant, the payment to the refund to the customer, or the payment to the another payment aggregator for the payment to the merchant, or the payment to third party account on the request of the merchant, or the payment of commission to the payment aggregator. These are the ideas. Interest bearing, so no interest shall be payable on the balances maintained in the escrow account, because this is just the transfer of money that is happening, but the interest will be paid on the core portion of the escrow account. Now what is the core portion of the escrow account? Core portion of the escrow account is the protected reserve within the escrow account. So the payment aggregators, they need to maintain some reserve amount, some reserve amount in the escrow account. Okay, so this is the core portion. This is not pre-funding. This core portion cannot be used by the payment aggregators. So core portion of escrow account, this core portion is a protected reserve within the escrow account that can only be used during the problematic situation. Okay, ensuring that a certain amount of funds is always safe and cannot be used by the payment aggregator for any other purpose. This is the core portion of the escrow account, that is the reserve portion of the escrow account that is kept in reserve. The core portion of escrow account shall continue to be maintained within the escrow account, maintained for the payment aggregator activity to continue. This facility shall be permissible to entities who have been in business for 26 fortnights. Remember this, 26 fortnights, that means nearly a year we can say, and whose accounts have been audited for full accounting year. So basically this facility of core portion shall be permissible to entities who have been in business for 26 fortnights. Okay, remember this point. No loan is permissible against the core portion, and this core portion of the money cannot be taken out by the payment aggregator. So bank shall not issue any receipt for such deposits which may entitle the payment aggregator to take out the money. The core portion shall be calculated separately for each escrow account. So if a payment aggregator is maintaining 4 escrow accounts, for each of the escrow account, core portion has to be kept. That is the protected reserve that has to be kept in the escrow account, so that the payment aggregator can continue functioning. So no interest shall be payable on balances that is maintained in the escrow account except on the core portion. So on the core portion, the interest will be received by the payment aggregator, but on the other funds in the escrow account, the interest will not be received. That is the basic idea. And in the inward collection, or the outward collection account, no interest shall be payable on the balances. And this core portion amount, this is only for the domestic escrow account. This core portion, it is only for the domestic escrow account. I hope this is clear. Sorry. So basically this core portion, it is for the domestic escrow account only. It is not for inward or outward collection accounts, and this core portion has to be maintained in the domestic escrow account on which the interest is also received by the payment aggregator. No interest shall be payable on the other amount in the escrow account. Now in the inward collection account and outward collection account, there is no core portion. That's why there is no interest on the escrow account. Okay, now escrow account by existing PA, within 2 months from the date of authorization that they have received from the RBI, the payment aggregator need to have the escrow account. That is the idea. Next is credit to merchant's account. As per the agreement between the payment aggregator and the merchant, such an agreement should be fair, equitable, and must transparently mention the settlement timelines, that within how many hours and within how many days the merchant has to be paid the money. Coming to the last portion, any confusion till now? Anyone? So general directions on escrow account of payment aggregator. Payment aggregator should submit the list of merchants onboarded by it to the bank. Okay. The escrow account shall not be operated for cash on delivery transactions. So escrow account, it is not to be operated for cash on delivery transactions, only for the online transactions. Fund for an outward transaction may be received in the escrow account of a payment aggregator domestic, and then this money has to be transferred to the payment aggregator cross border in the outward collection account. Okay, or directly the money should go in the outward collection account of the payment aggregator cross border. So basically, if the money has to go outward, even if the payment aggregator domestic is receiving it, it should go to the payment aggregator cross border in the outward collection account. Okay, and then the money will be settled to the merchant. So basically, for the outward transaction, for the outward settlement, always the money should flow through the outward collection account of the payment aggregator cross border. Similarly, for the inward transaction, always the money should come through the payment aggregator cross border inward collection account. Okay, so funds for the outward transaction may be received in the escrow account of the domestic payment aggregator and then transferred to the outward collection account of the payment aggregator cross border, or directly in the outward collection account of the payment aggregator cross border. So for the foreign merchants, only the debit should happen through the outward collection account. So that will receive the money from the customers or from the other payment aggregators, and that will be settled to the foreign merchant basically. In case a payment aggregator cross border also engages in domestic PA activity, so payment aggregator cross border can have the payment aggregator domestic license also and cross-border license also. But the escrow account for the domestic purposes and the escrow account or the inward collection account and the outward collection account, they should be maintained separately. The escrow account for the domestic purpose can never be entangled with the inward collection account or outward collection account. That's why there are different directions for the escrow account domestic, for the inward collection account and outward collection account. I hope this is clear. Next is that a certificate signed by the statutory authority auditor shall be submitted by the authorized entities to the respective regional office of the Department of Payment and Settlement System where the registered office of the payment aggregator is established, and certifying that the entity has been maintaining balances in the escrow account. Okay, and the certificate should be submitted separately for the domestic activity, for the cross-border activity. Next is, in case there is a need to shift from one escrow account to another escrow account, from one escrow account from one bank to another escrow account, that can be done. For banks, the balance in the escrow account, will be taken as deposits and will be considered. The balance in the escrow account will be taken in the net deposits. And against the net deposits of the banks have to maintain the cash reserve ratio. Okay, and the bank has to do the maintenance of reserve requirements. So basically, the balance in the escrow account shall be part of the net demand and time liabilities, that is the net deposits of the bank, against which the banks have to keep, against the net deposits of the escrow account and against the net deposits of the bank has to maintain the reserves. Okay, that I hope you know, that if the bank has the deposits, against the deposits the banks have to maintain some reserves with itself and with the RBI. So the escrow account, whatever balance it has, that will be a part of the net deposits, with the bank. Okay, so this is the idea. So balance in the escrow account shall be part of the net demand and time liabilities, that is the net deposits for the maintenance of the reserve requirement. Credits for reversed or refund transaction must be routed through the escrow account except when the merchant handles the refunds directly. So in certain cases, merchant directly handles the refunds. This should be already mentioned in the contract between the payment aggregator and merchant, and in no case customer should be affected. Okay, so this is the idea. Now try to answer this question. No loan is permissible against the core portion. Core portion is the protected reserve that has to be maintained in the escrow account. Okay, and core portion shall be calculated separately for each escrow account. No loan can be taken against the protected reserve in the escrow account, against the core portion of the escrow account. That is the idea. So basically here, if the merchant's annual turnover does not exceed 40 lakh or its annual export turnover does not exceed 5 lakh, the following process can be followed, right? And the core portion is a protected reserve that you have to tell me that this facility shall be permissible for entities who have been in business for how many fortnights. So these are the two questions that you have to answer. Okay, now coming to the next article, the Reserve Bank of India has signed its renewed statement of commitment to the Foreign Exchange Global Code. See, basically there is a wholesale foreign exchange market where we can exchange the dollars, euro, the rupees, and the various currencies. They can be sold and bought at a wholesale rate. Like you buy tomato from your nearby vegetable seller, or you can buy tomato from mandi. Similarly, you can buy the dollars or the big entities, the commercial banks and such. They also have a mandi kind of thing. They have a wholesale foreign exchange market. Okay. So there is a wholesale foreign exchange. There is a wholesale foreign exchange market where big entities get engaged. So the authorized dealers, category 1, category 2, category 3. So these are the authorized dealers that buy and sell the foreign exchange, and they are allowed to engage in the wholesale foreign exchange market from our country. So you can understand that around the world, major countries, major corporations, they are getting engaged in the wholesale foreign exchange market. Okay. So this wholesale foreign exchange market, the commercial banks, the investment banks, the big corporations that are allowed to engage in the wholesale foreign exchange market, even the central banks, they also do the transaction in the wholesale foreign exchange market. So this is the basic idea. Okay, first of all, so in 2015, the Bank for International Settlement, that provides a platform for the commercial for the central banks to come together. Okay, so Bank for International Settlement, it provides a platform. So Bank for International Settlement, it provides a platform for the central banks of around the globe to come together and to have the mutual cooperation and to maintain the financial stability and such. Okay, so governors of the central banks, they are the member of the Bank for International Settlement. Okay, so Bank for International Settlement, it provides the platform for the governors of the central banks around the globe to come together to have the discussion. So in 2015, the BIS governors, the Bank for International Settlement governors of the different central banks, they commissioned its markets committee, the markets committee of BIS, to develop a single global code of conduct for the wholesale foreign exchange market. Why this was required? Why there is a need for global code of conduct for the wholesale foreign exchange market? So basically what was happening, a number of high profile foreign exchange misconduct cases came into light in 2013-2014. These cases highlighted the fact that numerous existing regional foreign exchange code of conduct are ineffective. That means regional foreign exchange. There were regional, like for Asia, for Africa, for Europe, for North Bloc and such. So the regional foreign exchange code of conduct were ineffective due to lack of awareness or adherence to these codes by some market participants. So there were high profile cases that were coming up, that the foreign exchange in the wholesale foreign exchange market, there was misconduct cases that were coming forward, and the manipulation is happening in the market. The foreign exchange manipulation is happening. The foreign exchange rates are being manipulated by certain big corporations. So that's why the need was felt that there is a requirement for having a foreign exchange global code, so that in the wholesale foreign exchange market, there is the integrity of the market that is being maintained. Okay, so the code was developed, the foreign exchange global code. This was developed by partnership of the central banks. So BIS, I have told you that Bank for International Settlement, here the central banks of around the world, they are coming together. The major central banks are coming together for the mutual cooperation. So the code, first of all, it was developed by a partnership of central banks and private sector market participants, because I have told you that in the wholesale foreign exchange market, there are commercial banks, investment banks, and major big corporations. They are involved in the wholesale foreign exchange market, that are authorized to get involved in the foreign exchange market. Okay. So under the auspices of the BIS Markets Committee. So this code was developed by a partnership of central banks and private sector market participants under the auspices of the BIS Markets Committee. The work was supported by central banks from 16 jurisdictions around the globe and market participants spanning the sell side, buy side, and foreign exchange infrastructure providers. So everyone helped to build this foreign exchange global code. So the code promotes a fair, robust, liquid, open and appropriately transparent foreign exchange market, promoting high ethical and professional standards in the foreign exchange global code. So Reserve Bank of India has signed its renewed statement of commitment to the foreign exchange global code, that we are going to follow the code and we are working in accordance with the code, and the entities from our country are working in accordance to the code, and they are maintaining integrity of the wholesale foreign exchange market. Okay, it was developed by a partnership between central banks and market participants from around the globe, was first published in 2017. So this foreign exchange global code was first published in 2017. The foreign exchange global code has been updated or reviewed in December 2024, and as per that, the foreign exchange global code is a set of global principles of good practice in the foreign exchange market, developed to provide a common set of guidelines to promote the integrity and effectiveness of the wholesale foreign exchange market. So in 2013-2014, the high profile misconduct and manipulation cases that were coming up in the wholesale foreign exchange market, seeing that in 2015 the BIS governors, Bank for International Settlement governors of the central banks and the market participants, they came together to develop this code so that the foreign exchange wholesale market can work in a manner with integrity and effectiveness. So this is the idea. So the code was first published in 2017. So it was first reviewed. So Global Foreign Exchange Committee is entrusted with promotion, maintenance and updating of the code. So it was first updated in July 2021, and more recently it is updated in December 2024. Now the RBI has released this statement of commitment to the foreign exchange global code. This is the renewed. You can see it was released in 18 September 2025. So this is the renewed statement of commitment to the foreign exchange global code. So RBI continues to support the principles of good practices within the code, and so RBI has renewed its statement of commitment to the foreign exchange global code. RBI says that the code represents a set of principles generally recognized as good practices in the wholesale foreign exchange market. RBI itself is a market participant. I have told you that in the wholesale foreign exchange market, the commercial banks, the authorized dealers that are allowed to buy and sell the foreign exchange, they are allowed to participate in the wholesale foreign exchange market, as well as the central banks also participate in the wholesale foreign exchange market. So RBI itself is a market participant and works in accordance with the code, or acts in accordance with the code. Okay, so this is the idea. Any confusion here? Remember that it was first published in 2017, first reviewed in July 2021. It was again reviewed in December 2024, and RBI has signed this renewed statement of commitment. Now coming to the last article that we have to discuss, that is Constitution of Payment Regulatory Board. So the Board of Regulation, the Board for Regulation and Supervision of the Payment and Settlement System, was replaced by the Payment Regulatory Board, and we have discussed details about the Payment Regulatory Board. So basically, Payment Regulatory Board has six members. 3 members are from the Reserve Bank of India, and the other 3 members are nominated by the central government. They are nominated by the central government. Okay, so from the RBI, these you can see that the members of the Payment Regulatory Board has been appointed or nominated under the PSS, under the Payment and Settlement System Act 2007. So Payment Regulatory Board will have the governor of the RBI as the chairperson, deputy governor in charge of the payment and settlement system as the member, executive director in charge of the payment and settlement system as the member from the RBI. So these 3 members are from the RBI. Now so these 3 members are nominated by the central government. Okay, are nominated by the central government. So Secretary of the Department of Financial Services, Secretary of the Ministry of Electronics and Information Technology, and Srimati Aruna Sundararajan, IAS retired. So this is the idea. So basically, the constitution of PRB has happened. The constitution of Payment Regulatory Board has happened. There are 6 members in the Payment Regulatory Board. 3 members are from the RBI. 3 members are nominated by the central government. From RBI, the governor of RBI is the chairperson. Deputy governor in charge of the payment and settlement system is the member from RBI. Executive director in charge of payment and settlement system is the member. Secretary, Department of Financial Services Okay, is the Secretary, Department of Financial Services is nominated by the central government. Secretary, Ministry of Electronics and Information Technology, nominated by the central government in the PRB. And Srimati Aruna Sundararajan, IAS, retired, she is also nominated by the central government. So these are the 6 members in the Payment Regulatory Board. Remember that the chairperson, in case of equality of votes, 3 people are saying yes, 3 people are saying no. The chairperson has a second vote, has a casting vote. Okay, has a casting vote. That means if the chairperson says yes, so additional vote will go to the yes. Okay, so in case of equality of vote, the governor of the RBI, the chairperson, has a second vote or casting vote. So that is the idea. And the PRB, the Payment Regulatory Board, has to meet at least how many times in a year? That you have to tell me. Okay, they have to meet at least how many times in a year. And in the PRB, the quorum, that is the minimum number of members that should be present in the meeting, should be how many? So we have discussed the PRB in a previous session when the PRB, the Payment Regulatory Board regulations were released. So I hope you know that the PRB has to meet at least how many times in a year, as well as how many members, minimum number of members that should be present in the PRB. Okay, the minimum number of members that should be present in the PRB. Okay, so this is the idea. Any confusion, anyone? So Board for Regulation and Supervision of Payment and Settlement System has been replaced by the Payment Regulatory Board. Payment Regulatory Board now has these 6 members. Payment Regulatory Board should meet how many times in a year, as well as the quorum, the minimum number of members that should be present in the meeting should be how much. So out of the 6 members, at least how many members should be present in the meeting. Now, as you know that tomorrow on 5th of October from 11 a.m. onwards, there is the selection marathon that we are conducting tomorrow. So there will be reports from the last 5 months. The major reports will be discussed in the form of questions. The major RBI notifications from the last 3 months, the 3 months will be focused, plus from the July, August, September. These 3 months will be the focus areas. But from May and June, the most important directions from May and June, from there also I will bring the questions. Okay, as well as there will be questions from the schemes. So remember that tomorrow 11 a.m. onwards there is the selection marathon. This is on YouTube, absolutely free of cost, that you should not miss at all, where we will be revising the reports by Devanshu sir will be taking that part, and 60 questions MCQs will be on reports. Then RBI notifications we will be revising last 3 months in detail, through the MCQ format, and we will also revise the important notification from May and June. And the 60 MCQs will be from RBI notification and 80 MCQs will be from schemes. Okay, and this is going to start from 11 a.m. So done. All 3 parts will happen tomorrow. So it is going to be it is going to be 200 questions. On 5th of October, selection marathon, 11 a.m. onwards, 200 questions, 60 questions of reports, 60 questions of RBI notification, 80 questions of schemes. So you should not be missing out this. Okay, and the questions, I have not brought the questions for these articles today, because tomorrow we are going to discuss the questions from July, August, September, and May and June also. So this is it. I hope you are excited, because the team is taking a lot of efforts for this session. Okay, so I hope you are also excited for this session. So thank you everyone. And if you want to get the test series, if you want to solve number of questions, number of MCQs, so for that you can take the test series. If you want to have the quick revision, you can take the quick revision batch and such. So for all the batches for the regulatory body courses, there is flat 75% off that is going on. You can use the codes festival75, and this is valid till 5th October 2025, that is tomorrow only. So this is it. You will get the PDF of today's session in the Telegram channel. If there is any confusion, that you can write in the comment section below. Okay, the PDF of the session you will get in the Telegram channel. So thank you everyone. Any confusion anyone has? No confusion? Okay then, thank you everyone. Thank you for joining.